All right, nailing down your entry is very important because you may know the right direction, but get in at the wrong spot and lose the trade. All right, just because you got in at the bad direction. So I want to show you how to be able to get into a trade at the proper direction, what the things you should be looking for, and hopefully that helps you out. All right, so let's get with it. I am offering a lifetime membership at my website. So just want to show you real quick what that entails. So basically this is my website. All right. And as you can see here, it's basically a blog setup, but also we have, you can join right here by becoming a member, become a lifetime member. So I'm offering a lifetime membership. Right now, you could become a member of my website, become a lifetime member. You pay one time and that's it. You never pay again. You get all the content, and I'm getting ready to show you what that content entails. So then we got a little bit of Ichimoku. This is the free site. This here is the free stuff. So then you have your members log in, which will then take you to where the videos are, and you can watch and see the videos to your homepage, your FX at One Glance homepage. So let me take you to where that is real quick. So this is your FX at One Glance members homepage right here. So on the homepage, you could see this is the member dashboard. You have all your courses. So here's a high probability price action course, trading with fractals, Ichimoku Foundational, Ichimoku Advanced. And then we have some other courses, stock market course. We don't have these all analysis. Then you have a quiz. All courses will have a quiz. Then you have your market structure, support and resistance, supply and demand. Okay, so then we go back to let's go to I don't know how to even get to where I need to go, right? But I'm going back to the home page. I'm going to take you to the next course, which will be this fractals course. This is a very important course. The first two courses, the fractals and the price action, very important. So understanding the fractal concept, trading the fractal break, trading the fractal bounce. So guys, the main thing is, when I'm talking about levels, that's the main thing. Talking about getting into a trade, it's going to be these levels that we talk about. So let me go back to the home page, then show you the foundational course. Is really big. There's a lot of things in the foundational course. So you have your risk management, all about Ichimoku, price action signals and triggers, TK crossover strategy, Kumo breakout strategy, Kijinsen bounce and break strategy, trading Ichimoku with fractals, trading Ichimoku with support and resistance, trading Ichimoku with multiple time frame analysis, trading Ichimoku with divergence, trading Ichimoku with Heikinashi candlesticks. All right, so let's go back to the last course here. And then the last one that we're going to look at is this Ichimoku Advanced. So on the Ichimoku Advanced, you have Ichimoku 5 elements, and then you have Ichimoku Time Analysis Part 1, Ichimoku Time Analysis Part 2. Very big videos. This one's really long. You could see how long it is right there. And then the next one is an hour and a half, over an hour and a half long. Then you have Ichimoku Wave Analysis and Ichimoku Observation Theory. That's your Ichimoku Advanced stuff. So that's what we offer. Also, you have a chat room. I'm not going to go there. It's not even hooked up on this page. You have to go there a different way. But you have your videos for Forex analysis, crypto videos, stock analysis, and educational videos, trade alerts. This is all your courses. But let's go back to the homepage again. So on the homepage, if you scroll down the homepage, you'll see the recent videos. So this is the last session I had, because I didn't have a session this past Sunday because there was the Super Bowl, so I didn't have a session. Then you could see this previous session. Then you could see what's coming up now. So we have 2 sessions coming up. This is wrong right here. That's not happening. I must have messed up when I put that in. Yes, I did. So people are probably registering for that one, but that was 4 p.m. on February 10th. Okay, so that's right. That's 4 p.m. February 10th. We have a crypto session, but that's going to be Monday. And then Sunday, we have a Forex session at 3 o'clock. And then this is the one that I accidentally put in. That's wrong. So you can see that says 12 a.m. to 12 a.m. We had a session less than a minute. So if you become a member, you'll get onto this homepage here. Once you get onto this homepage, you'll have access to all this stuff, and then you'll be able to click here and go to the register for the session. So you'll come down here and register, and you'll register for the session, and you'll get an email with your link to get to the session. Okay, so that's what you have basically, and that's what it looks like. So hopefully you guys decide to take up that offer. That's going to be a lifetime membership offer where you will be able to come to every course I have. Oh, and also you'll be able to have every course. You'll also have every webinar session that we have. And then you'll also have the trade setups, which is becoming different now because I'm looking into doing trade setups via mass text. So your trade setups will come straight to your phone. So that's what we're trying to set that up now. Pretty much got that lined up and going to start incorporating that, and it'll be easier to get trade setups out quick and in a hurry. All right, so that's what you get if you become a lifetime member. So just wanted you to see that. So let's get to the video. All right, guys, so I want to show you why it's so important to nail down your entry, because you could get in a good trade and be at the bad spot and the trade is bad. All right, so I'm going to show you, because basically I got into this trade and I'm going to show you where I got into the trade. Then we'll look at a couple other pairs real quick and then we'll be out. So I got into this trade. I barely trade the Kumo breakout. Okay, I barely trade that. But what happened here was we had this breakout, and then I also should have realized I didn't think about this. I wasn't thinking, but this trade right here found support at this level of the cloud, the bottom of the cloud. So we broke through here, but we also found support at the bottom. So we knew this was going to be a possible pullback. And I was set up for that because, as you could see, this is my zone, and I expected the market to pull back to that level. Guys, normally I'm trading at this level. All right, I'm not trading down here. I'm usually trading here. But since I traded with Ichimoku basically, and I took this Kumo breakout, I barely take the Kumo breakouts. I don't take a lot of Kumo breakout trades. And this is the main reason why, because a lot of times you'll get into a Kumo breakout trade and then the market pulls back on you. So it's kind of hard to really judge it, okay? It's hard to tell. But you can see I got into the trade. This is where my stop loss was because I like to be above the previous fractal levels. But then look what the market did to me. And I've been in this trade since this day, January 15th, still sitting in this trade. And you could see this trade has done nothing for me. You see? So I sat here and I kind of expected the market to pull back to my zone. You could see my zone. This zone is where I'm normally trading. This zone here is where I should have been trading my entry short. All right, I shouldn't have been short down here. But this is the difference in the trade. Now, the other thing is I could have also gotten out of this trade, gotten stopped out of this trade, had I not known where to put my stop loss. Now, I almost did get stopped out, but the thing about it is I want to be above the previous fractal levels because I trade the fractal levels as my stop losses, which is very big. But I also knew that this was my level where the market was going to pull back because I knew this is where I would see that increased momentum to the downside. All right. So we lose the bullish momentum and gather that increased momentum to the downside at these levels. These levels are where you'll find the momentum pick up and the momentum start to kick in. Just like this point, this was a level where the market did pick up some momentum because it found support there. This is a level where the market found momentum because it found resistance here and picked up and went to the downside. This more than likely was news here. I'm pretty much stuck in the trade, but now you can see I'm starting to recover. I stayed in the trade, guys, basically because I either wanted it to stop me out or to honor this level. And I see that the market was honoring that level, so I never really wanted to get out of the trade. As long as the market would honor that level, I'd stay in the trade. And you can see I'm losing a little bit, but I was losing a lot previously, but I keep the levels that I have. I trade the levels, and I also use the fractals for my stop loss. So I had a pretty good size stop loss. You got to also make sure you can afford that stop loss. If you can't afford that stop loss, you either have to reduce your lot size or don't take the trade at all. But you're always wanting to be at these levels. My stop loss wouldn't have been so bad had I taken a trade at this level where I trade. I want to show you guys how to trade these levels, how to find these levels, how to set up these levels. And by becoming a lifetime member, you're going to see that, because this has involved all my courses. My courses will show you this. The fractal course, the price action course, you're going to learn these levels. You're going to learn how to get in the market at these levels. You're going to know where these levels are and why you should be trading at those levels. All right, you shouldn't be trading anywhere else except those levels. So when you make a trade, it should be a level trade, and you should have a reason why you're getting at that level. If you're trying to go long at this level, all right, then you know it's a support level. If you're going short at this level, then you're trying to break out of a level that the market is honoring as support. And here I went long, and I went short, and the market went the opposite direction. I kind of expected that, but I should have been more, traded my rules better, because I know I wanted to trade here. But I did have the Kumo breakout. All signs were bearish, but also thinking that if we got that pullback, then I would see the market continue to the downside. It pretty much has not given me the strength that I thought it would to get back to the downside, but it's starting to look like we're picking up, because we got our TK crossover up here was bearish. Cloud future is bearish. The angulation is very nice on Tenkan-sen and Kijun-sen. Well, basically Kijun-sen. Tenkan-sen's just rolling a little bit flat. But seeing that angulation is good. But we also see this level. The market is unable to break through this level for the second attempt. We're coming up on the third attempt. If we could get through on that third attempt, then I'll see my trade probably continue to the downside. At this point, I'm going to have to make up my mind. Am I going to sit in this trade and let this become a range trade where it bounces off of this level and I don't get anything? Or is it going to be a level where it breaks through here and I can continue and I get me a big running trade for quite a while? If I could get through here, I'm probably looking at the next levels and seeing where the market could go to. And overall, I'm going to be looking at this level down here for the market to get down to this point. All right. So the levels are super important, because, again, you could trade the right direction at the wrong point and then get caught in a correction like I did here, and then get stopped out, and then the market goes your way. Luckily, I didn't get stopped out. Let's look at a couple other pairs real quick. I want to show you these levels that we talk about. So with this Aussie yen, looking at Aussie yen, again, you could see the market came up to our level. The market went down and retraced back to our level. Just a correction. But guys, you will know how to find these levels and know these levels. These levels are easy, and you're able to trade them very well if you can find them. Now, the one thing is, you also had a level where the market bounced off of Kijun-sen right here. Even though I had this zone right here, I also had a Kijun-sen bounce. So the zone was important, but I also had that Kijun-sen bounce too. All right. So that's how important these levels are. Again, the CAD yen here, looking at a good level. I didn't really draw a level here, but when I'm looking at this, you could see this is pretty much a support and resistance level. You have a resistance here and then support here, then it breaks through, then you have resistance here again with the cloud, with Kijun-sen, and you're inside the TK zone. But you can see this lower level. You can see how we have this zone right here. See these two dashed lines? That's a very good level for us to trade off of. You can see how strong that level is. All right, so finding these levels, knowing these levels is very important. All right, so let's go to the next one. Swiss franc yen. We're actually looking at the market sitting at a level, but I don't know if it's going to honor that level. We're waiting to see there. All right. Euro Aussie. All right, so looking at the Euro Aussie, this is a very good one, because you could see this nice level here. And basically you could see the level lined up with the cloud here, a flat cloud, but you could see how many times the market bounced on this level in itself here, and then here again, and then broke the level and came all the way back to the level. This is why, guys, you got to be a patient trader up here. You can't be jumping on the run here. This is what I always tell traders, that you have to trade at the train station. This was not the train station, okay? This is your train station, this level right here. The market came back to the train station. That's when you get in. If you're trying to jump in here, you're jumping in on a train that is not at the train station. You're just jumping in the middle of the train station. And if you fall off, you lose. And catching a trade way up here is a big loss. And then you come down here, and this is where you want to be looking at getting into your trade, because then you could see your level, and then you could even see the price action with it. So just trade and being patient and learning to trade these levels. If you trade the level, understand the level, know where the level is, you'll be patient because you're going to wait for the market to get to those levels. Now, you may get a little impatient near the level, but at least you'll be trading better at these levels than at spots where the market's not going to do well for you. All right, so that was the Euro Aussie. I'm just looking real quick, just showing you Euro CAD. This was another one. You could see this level here, and then the market went higher and then pulled back to that level. Again, patient traders up here, because we all know and think that the market's going to correct, and it corrects all the way back to that level, giving you a great opportunity for a trade. So far, it hasn't honored that level yet, but we're going to wait for the price action to see how it reacts at this level. There's a possibility to get a good trade here. So guys, watch this, because if I take Ichimoku off of here, you can watch this for next week, that this could possibly be a good trade set up somewhere if the market doesn't fail and go through here. Because if the market breaks this level, more than likely it's going to probably try to go back down to this support level. But if it honors this level, then we'll probably see a bounce here and the market move higher. We can trade it from this level at least up to the 2 level. This is your 1, 2, 3, and then shooting for 4 would take us at least up to this point here. You could see where this support and resistance level is. So this is where currently I would be looking for a trade set up next week for this market to get into a nice trade with the Euro CAD. And finally, I'm gonna look at the Euro USD. Whoops. So Euro USD, you could see again a very great level, nice level we had. The market goes down and pulls back to this level and then goes down here. You got to be a patient trader, guys. You got to be patient down here. If you're not a patient trader here, because see, I'm very patient when the market's moving like this, because all I'm saying is pull back to my level. I'm waiting for it to pull back to my level. And I'll say the percentage of times that it pulls back to my level could be maybe 50, 60%. But if I'm patient and wait on it, it's usually a good trade when it does pull to that level. All right. But even if it doesn't pull back to my level, there's other levels as far as support and resistance levels that you would look at then. So maybe it won't be a pullback, but it'll be a bounce off of a level, as far as like bouncing on a support level where the market's flat or sideways, where it's not trending. And these trending markets, you have nice levels where you can watch the market pull back to and get into a good trade. Euro USD. This is the New Zealand dollar yen. This is the last one I'm going to look at, because basically, guys, you could see again another great level that we have here. All right. And then the market pulls back to our level, gives us some nice price action, and then we're in the trade. Now, also, I will teach you how to trade these zones. All right. Because when the market pulls up into these zones, you want to be able to get into the trade before the market. Like if the market pulls higher, you want to put your entry at the bottom. If it pulls all the way to the top, you want to put your entry in the middle. So you're going to put a sell stop here and then watch the market come down to you. You don't want to say like this. A lot of traders do this. I'm going to put a entry here short while the market's down here. The market pulls up here. You're waiting for it to pull here, bounce, and go to the downside. But instead, it pulls here and goes right through, triggers you, and keeps going. You get stopped out, and then the market goes your way. You always want to let that momentum build up back to this to the side that it was going. So we're watching the market trend to the downside. So therefore, we want to catch that trade back to the downside. So we want to let the market come down to us. All right. We don't want it to come up to us. We want it to come down to us and trigger us into our trade. So just becoming a member, you'll learn all that kind of stuff. A lot of things. It's not just Ichimoku here. It's price action, fractals, you name it, divergence, a lot of things that we just focus on to get us into high probability trade setups. You're not going to win every trade, but you want to be in a high probability trade setup and you'll have a better chance of winning your trade. So that's all I wanted to talk about today. But guys, remember, I'm offering that lifetime membership. So come on and visit me. Get this stuff for the rest of your life. All right. Hope you enjoyed that. Thanks a lot. God bless. So long.